This is Tammy PLC, and we're looking at the dividends for this question. So if we look through the trial balance here, we can see that there's dividends paid of 24,000, and at the bottom of the question, so there's no other information there in the trial balance. Until we get to the bottom, I've just cut out the rest of it just to fit it in. But the part here says, in the 1st of July 2012, the directors proposed the payment of final dividend in ordinary shares to bring the total dividend up to 3 cents per share. Straight away we can see there's absolutely nothing there about proposing preference dividends. So what it does say is we're proposing the payment of a final dividend on ordinary shares. Nothing about preference. So we have to bear that in mind. So looking at this here, dividends paid 24,000. So we see that here, dividends paid 24,000. Some of that's going to be ordinary, some of it is in preference. Unlike other questions where they tell us 6,000 is interim dividends, that would be ordinary, and 18,000 is preference. We haven't been told that breakdown, so that's all we're told, and we need to find out how much of it is preference and how much of it is ordinary. Now the simple way to do it here is we're always going to know what the preference is. We've 8% at the top, percent for the issued, we have 200,000. So simply, if I multiply 8% by 200,000, I'm going to show it here, it has 16,000. So that preference is 16,000, and we know that all of it is paid. We know all of it is paid because there's no proposed at the end of the year, which means they paid all of the preference dividend. So from that 24,000, the amount of the preference dividend is paid in full. If I take that away, it tells me how much I paid in ordinary dividends. So we don't have to deal with preference anymore. The entirety of that has been paid out of the 24,000. So what's left, the 8,000, that's the ordinary that we've paid. Now the simple way to calculate how much preference we should pay for the year is the exact same as we would ordinary. It's 400,000 here multiplied by 3 cents. The reason it's 3 cents is because the directors proposed the payment of a final ordinary dividend to bring the total dividend up to 3 cents per share. So the directors want the shareholders to receive 3 cents for every euro they've invested. So there's 400,000 invested in the company or in ordinary shares, and they want a 3% return. We just multiply that and it gives us 12,000. So they want to pay 12,000. We know they paid 8. So simply if I take away here, if I take away my 8,000, what it's going to leave me with is 4,000, and that is my proposed ordinary dividends. So this is my proposed. I've paid the 24,000. So when I'm doing the P&L, I'm going to have my 24,000 in normally as paid, and under that I'm going to have proposed 4,000, and proposed dividends also goes into the creditors amounts falling due within 1 year. On its own, that'll be 4,000. So there's nothing to do in this question for proposed preference dividends. This question just had proposed ordinary dividends. So this is the second question we're going to look at, so it is a different question. This is Ryan PLC, and for this one we're going to look at dividends again. We have interim dividends for the first 6 months, so basically we've paid dividends. The figure is 13,250. If I get onto the bottom, it breaks that down. So broke it down there, we've 8,750 was ordinary dividends paid, 4,500 was preference dividends paid. So obviously it says ordinary and preference respectively. That means that the first one is the first one and the second one is the second one. So if I look at that here straight away, I can see that from the 13,250 I've paid, ordinary was 8,750, preference was 4,500. Now the preference is usually the easiest one to start with, just because they've always given you the figure. The percentage is in the return on the share, so it's 6% here at the top. We see it up here at the very top, it's always there, and it's down here as well, but it's 150,000 were issued, so 150,000 multiplied by 6% is going to give me 9,000. So 9,000 here is the total amount of preference shares. Now we know we've paid 4,500, and we know that there's more yet to pay, they propose the payment of preference dividends and final dividend. So the preference dividends due, whatever's left, and the final dividend, and we'll look at that figure later on. So what is left is 4,500, because I know I have 4,500 paid, and I know I have 9,000 to pay this year, so 4,500 is left. That's preference. So we can move on now to try and calculate ordinary dividend. I want to bring your attention to the wording of this question. This is a little different than anything we've seen before. So the directors propose the payment, so you've preference there, and this is ordinary. A final dividend on ordinary shares of 2 cents per share. So in previous questions we've looked at, it has always said final dividends in ordinary shares to bring the share to 6 cents per share, to bring the return to 6 cents per share, something like that. Whereas this time it's telling us to pay, we have to pay it, so they're proposing the payment of a final dividend of 2 cents per share. That means that the dividend we're going to pay is going to be 2 cents of the share. It's actually going to be completely separate. There's 2 cents of the share here. It's going to be completely separate to what we've paid already. We don't even need to look at this figure. So what I've done out here is I have my 350,000, which is my total issued shares, and I'm just going to multiply that by 2 cents per share, because that's what they tell us to pay. So it's not to bring the share up to 2 cents, it's not to bring it up to 8 cents, it's not anything like that. It's they just basically want us to pay, so the proposed dividends, and they want us to pay ordinary shares of 2 cents per share. So if that was 6 cents, I would multiply the total issued by 6 cents, and whatever amount that would be the proposed only. So in this case, it's 2 cents per share. So you just have to be mindful of the wording, because here it says to pay of 2 cents rather than bring it up to 2 cents. 7,000. So basically, if I was to look at my P&L, I am going to have already paid 13,250, and my total proposed is going to be 4,500 and 7,000. So that would be 11,500 would be my total proposed in the P&L, and obviously that is going to go into my balance sheet as well. Creditors amounts falling due within 1 year. It's got its own heading, proposed dividends 11,500. So obviously it goes into P&L and the balance sheet. Just to look at the notes of the accounts, just to kind of explain this further, and I'll just kind of highlight everything I have done up here. So break this down bit by bit. This is our normal table. We have our ordinary, what's paid, what's proposed, preference, what's paid, and what's proposed. So the interim obviously being what was paid in the interim, which is earlier on in the year. So I've all the figures up here, but I'm just going to try and go through what we've kind of looked at first. So preference, which is easier to look at. We paid 4,500 and we proposed 4,500. Simply, all those figures are already, we've already got all those figures as we have the totals here. So we're actually just looking to calculate these. The rest of this is just put it all together. So ordinary paid, sorry, I'll start at preference. So preference is 4,500. If we just look at paid first and we divide that by the total amount, we can find out how much return they got. And we know that to be 3 cents per share. So it's 3 cents per share, and obviously the amount we paid was the exact same as the amount we proposed. So if you wanted, you can multiply that again, 4,500 divided by 150,000 multiplied by 100 over 1 gives me a 3 cents per share return here as well. And just for the ordinary, it's 8,750 divided by 350,000, because that's the total, and that's going to give me 2.5 cents per share. If you add these up, the total ordinary return was not 2 cents, because the 2 cents was only for proposed. So the total ordinary return was actually 4.5. Not that you need to kind of include that, you just basically needed to distinguish between the 2 cents being proposed only compared to being the total, as in you're bringing it up to 2 cents, where all of this will equal 2 cents, but it doesn't. So this is just separate here, 8,750 divided by 350,000, which is the total, multiplied by 100 over 1 gives me a 2.5 cents per share return. The rest of that we've already kind of looked at above, the rest of the figures. So that's just kind of in the notes of the accounts, putting it all together.